Good morning everyone and welcome to this week's weekly market view for Monday the 9th of May to Friday the 13th of May 2022. My name is Vishal Suban and I am the head of trading education for Sharekhan Education. Today we are going to review the indices. We are also going to be looking at a key sector and we are also going to be analyzing a stock as we go along. So let's dive down deep into the charts and let's look at some of the important levels for this week. Alright, let's start with the Nifty analysis. As we can clearly see that there has been a little bit of selling pressure coming in at these levels, and this is the area that we mentioned last time that we need to be a little careful about. The demand zone on the monthly chart is still holding, so the monthly demand zone is still intact, and this means that probably this week, because today we are expecting a gap down opening on the Nifty, we might expect the market to also open gap down, and probably in the due course of time these levels might even be retested. If we go on to the daily chart and if you look at the bottom indicator over here, this is our options IV gauge, and this is telling us that a couple of days back the IV had comparatively dropped down, but because whatever happened on Friday, there has been a significant rise in volatility, all right, which means options premiums are more and more expensive right now. And today if we have another gap down, it means that this volatility might even further increase. So as an options trader, you have to be careful when it comes to buying options, and the focus more is towards selling options or maybe planning some credit spreads. If we go on to the intraday perspective, so let's go to the intraday chart of the Nifty. And if we do happen to see a gap down, we have these key areas of demand that we cannot ignore at this point in time. So there is this one area over here which is this rally odd level. It's slightly lower, but who knows, we might get a test of this level, and then we have this origin of the move over here. So these are the key levels on the Nifty, and as long as these levels are holding, we should be okay. We might expect to see a bounce, but any bounce that comes in this market will probably be again inducing us into taking more shorts. So just be a little careful right now. We are coming very close to these demand zones and we might expect to see a bounce, but any bounce in this market will lead to further selling pressure. Let's move on to the Bank Nifty. And if you look at the Bank Nifty, we are more or less seeing the same picture. We also have a level on the 60 minutes on the Bank Nifty, and depending upon where the market opens, let's mark these key levels on the chart. So there is this 60-minute rally-based rally level, and then you also have this drop-based rally level on the Nifty. So more or less both these levels are lining up with the Nifty levels, right? And this is more or less the origin of the move. So if market comes over here, then we should be expecting to see a bounce. If you look at the daily chart, again the volatility is telling us that the premiums are fairly priced, but today because of the gap down opening, this red line might shift to this next zone here, which will probably tell us that options have becoming more and more expensive. Let's move on to the USD INR chart. And if we look at the USD INR chart, just see how the markets are inching towards this 77 handle, right, which is more or less we are closing to the all-time highs. So now we are very precariously placed, because the fact is that the USD INR and the Nifty are inversely correlated, and that means that if the price gaps up into the supply zone and at the same time Nifty enters the demand zone, then we might be able to see some reaction coming from the USD INR to the downside, and we might see some reaction coming on the Nifty to the upside. If we look at the volatility gauge here, the options premiums on the USD INR are also indicating that they are expensive. All right, so option selling is the way to go, or then maybe some kind of vertical credit spreads. Let's look at the sector for the week, and a much talked sector, which is the IT sector. So let's remove all the tools here. Let's make the charts look nice and clean. So right now, if you look at the IT sector is also a little bit under pressure. But if you look at the the monthly chart, we are coming into this monthly demand zone, and since the price has already hit this demand zone, we might expect to see a little bit of a pause. And in case if that happens, then there is a possibility that the likes of all the IT stocks such as such as Infosys, TCS, these are also expected to give us a bounce. So let's quickly dive down into the Infosys chart and let us see what do we see on the Infosys chart here. So if we see the Infosys chart, we have this candle over here which is significantly bearish, but we are in the demand level on the IT sector. Now there is a little bit of pressure here, because what we don't want to see is that we don't want the market to create something what is called as a drop based drop. We would be more than happy if the market creates a drop based rally, but depending on the market open today, this area is going to be very, very crucial. And remember, this is the weekly chart. All right, we also have another area which is slightly below, and maybe that is the area from where we might expect to see a bounce coming in on Infosys. So 1500 to 1450 long term level, and a similar level on the daily chart as well. All right, so this is how we see the markets for this week. We will meet same time, same place next week. Till then, safe trading, good luck, and goodbye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.